Hey, everybody. Welcome back to Swing Trading. My name is Mike Fairborn. Good to be back with you all today, folks. Today, I want to take a look at a deeper dive into some of the bounces that we've been looking at that tie into that swing trade time frame. I want to look at one that is volume-based, though. Volume at times can precede price action. We don't want to forget about, cross-price crossovers, closes above the high to low day, or any just kind of moving average breakouts or trendline breaks. But what can lead that, and I want to kind of pick up where we left off last week, is a volume based move where volume is increasing on that bounce outside of, let's say, a price pattern of sorts. So looking forward to diving into that. It's a great topic to consider. And before we do that, though, would like to welcome all of you on board. It is great to have you back for our class. This is one I do look forward to each and every week. Welcome to you, Paul, Josh Casey, CC Kelly, Life of the Fast Lane, Jay Richardson, Scott from Hawaii, Chris B. We've got Rojo and her name was, as well as Will, folks. Welcome to all of you, folks. Any questions, comments you have, send those in the chat because we have a great chat person in this class each and every week. A good friend of mine, colleague Connie Hill, very knowledgeable on the topic. Connie does hold the CMT designation, a difficult designation to get for technical analysis. Great to have Connie on board. She recognizes a lot. She teaches some great classes as well. By the way, you can follow us both on X. Encourage you to do so if you're interested. Connie Hill CS, Mike Fairborn CS, folks. Let's get to it. All right, some disclosures here. Information here is for general information purposes only. Should not be considered an individualized recommendation. Options, they do carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, a short put does risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application is for educational purposes only. Vesting does involve risk, including the loss of principal. There's no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results or success. Dividends are not guaranteed. They can be cut at any time. Finally, a list of futures disclosures here. We do reference futures from time to time because futures can give interesting insights as well. We don't trade them here, but hey, we thought we'd throw them up anyways on the screen. Okay. With that, everybody, let's go ahead and take a look at our markets here. We might just take a look at that stock here in just a second, but full screen it. And here is the S&P 500. Where are we at? Where are we sitting? How do we stand relative to the Santa Claus rally and how that might unfold? Well, we know Santa Claus rally begins. Well, this is the date that they say it begins, right? Traditionally, this is the general date. It was an up day. It was right here, the 24th. Let's just see how we're doing. It does run for the last 5 days of the year, the last 5 market days of the year. You can see us right here starting. We did jump up, which was an important day in the markets because it was the highest close we've ever had on the S&P 500. And you can say the highest close, yes, but we also closed above a resistance range. Right here, right there. And when you get above resistance, you guys know what might come from below, and that would be support. Sometimes you cross those important levels, you can find support at those points, and you can sometimes get a bounce or you can hold. We're seeing interesting signs of that right now today. Okay. Now it does also run. I want to remind you, we're not done at this sort of grid line at the end of the year, which does mark, there we are, the end of the year, 2025. It can run beyond that. In fact, the Santa Claus rally runs into the next 2 days of January, right down through here is what it's been known. Now, does that mean it has to stop right there? It stops? No, it can still continue, but that is, in fact, what is defined generally as the Santa Claus rally. And we're not doing too bad, all else equal. I mean, I step back and look at this and I say, is the trend up? Yeah, the trend's up. We like to reference some of those longer term expectations that some traders will use, right? Are we getting, the trend is up, and more recently, are we getting a higher high from here? Excuse me, a higher low right now, resting on supposed support, that's a number 5. Supposed to be an S. That's what happens when my mouse goes off the keyboard. Now let's see if I could do an S. If it goes above there, that could be another high. High, high. There you go. Higher, higher, high, and higher highs as well. So interesting indication short term. We see some of this too. Without going into too much detail, I keep this within just a minute or two, folks, as we look at this. But what we're saying over here is a little bit of what some would refer to as sort of a coiling pattern, also known as maybe a symmetrical triangle. You can kind of see that. We don't know if we'll come back down here, but those triangles are often 1, 2, 3, 4, 5. And where are we at? If it's a triangle in a standard sense, it's a 1, 2, 3, 4, 5 symmetrical triangle. By the way, most of the time, if people are using Elliott wave or whatnot, it's an A, B, C, D, E. Okay. That'd be 5. A, B, C, D, E. And here's the thing. What's so interesting about this is if it comes down here, can it come down a little bit? Yes. Could it stay right here? Sure. S&P's holding its support. It could, but how might we recognize that this might be moving? More confirmation, traders would say, right there. Can we break above the prior high? I don't care if it goes to here. I really don't care if it goes to here or here. If it starts to break above that high, that's what traders will look for as the change, or maybe getting back to a trend. Why are we talking about the NASDAQ, folks? Because the NASDAQ has really accounted for some big moves in the market. Okay, that's all I got there on the markets. Bottom line is this environment interesting possibly for bull flag type patterns, inverted head and shoulders? Absolutely. The trend's up in the general market. There are a lot of companies within these groups, and we can still see the same thing. All right. Now, we want to review some of our prior stocks that we were looking at from last week. And by the way, here's one that we had on Edward Life Sciences. You guys could probably see that flag pattern. It's a very common pattern, folks, that a lot of traders will use. Some traders will say it's their favorite pattern because it accompanies the trend. It accompanies the trend, higher highs and higher lows, and boom, right there. You're getting what you're actually seeing right here is not just a higher high and a higher low, but more strength in price to the upside, up, and less strength to the downside, and that's the pullback. And I was just having an interesting conversation with my producers. We were talking about this a little bit, but just generally speaking, a lot of traders will, and this is just general, but they might say that on that flag pattern, they're looking for maybe no more than a 50% pullback of the prior high range, or a 61.8% pullback using fibs, some Fibonacci lines, some Fibonacci numbers, 61.8. Those are some of the, I would say, sometimes more common Fibonacci levels that traders are using. So I'm just going to throw these guys in as an example. Maybe my 50%'s right there. Maybe my 61.8's right there. But those are what they're looking for, okay? And so in this class, we reference these quite a bit. And then we're just simply, at this point in time, just measuring off the high run, the same target off of the low right there. So this movement in price, all we're simply doing is we're taking that exact range in price, in dollars, and we're saying, give me that level right there, and that is our price target. Now, there are 2 price targets that we talk about, and I want to bring it up because we talk, sometimes people will say, Mike, is this a class on bull flags? And it kind of seems like it is because we do so many of them. It's in line with the trend, but some days it's a class on inverted head and shoulders patterns, or head and shoulders bottoms. But price patterns are kind of part of a lot of swing trading. So park that in the back of your mind. But we do talk about a couple of targets that we just hit on this one. And some traders might take this because our purchases were down here in this range. And we did hit what's referred to as the T1 target. Now the T2, which is what my line represents here, that target, that's the full extension of the flag. The short-term projection of the flag is simply just to the high point where there's what? Resistance. Are we finding resistance on this stock right now? We definitely are. We're finding I mean, we've paused for the last 3-4 days or more, but what we're seeing here is same entry point for both of these targets, but T1 is right at the prior high range, right there, okay? Right at this level. T2 would be the full extension of this move. I'm just gonna, I'll just make this in yellow to represent like the full range. And all I've tried to do is balance out this price move right here, which many of you are good at in this class, is just seeing these targets. One of the real advantages of price targets, price patterns, is you get a target range as well. This price measured off the what? The low right there to the upside. That's all this represents. I don't know if I balanced that perfectly right. It might be a little bit high, but that's what this represents over here. That's what we call the T2. It's the termination of the price target of the full extension. All right. So that's where we're sitting at. What do you guys think? We elected. Now, some people might have taken this off right here, and they still might. In fact, let me do this right now. Ooh, zoomed in on. There we go. So if I'm over here, one way that traders might consider in terms of trade management, in terms of getting out of this, is right there. What happens right there at this point? Do we close below the low of the high bar? Some might take it off the table or take some off the table. We've only got 50 shares in here right now, but we were going to say if we can break above that level, which we didn't quite do, we would consider adding 50 more shares because there's more confirmation, is one way a trader would look at this in terms of a right there, the full target 2 of your bull flag. Steady as she goes with this one. Now this one here, also pretty steady as she goes. This was AKAM with a rather massive large price target. I'm going to just show you this. If I duplicate our target here, guess what that's going to match? Watch this. Duplicate it. I just right click to duplicate. I'm going to pull this over here, and you guys tell me, did I do an okay job? Oh, you see? That's all we're doing. We're taking this range, we're taking it to the low, and we're putting this range in. Now, this guy, too, got very, very close, and some would say touched off those highs right there in terms of a T1 target. A lot of the stocks we look at, they're more prone to hit the T1. The T2 is, in fact, the full target. But that's what we're going to add in here, 50, if we can actually break above the T1 target. Like I said, some traders might just do, instead of adding 50 or letting 50 go, they might simply just say, nope, that's good for me, Mike. I'm taking the 50 off. Because some traders will say, you never go broke taking a profit. Okay. There are different ways to do it. We like to discuss a few of those. We're actually getting that Jesse Livermore bounce right here too. This is one I discussed in my ThinkScript class, a code that I put in place, and I just have it on the charts over here as well. Right here, see the pullback? What it's doing is it's saying, hey, I got a low at least over the last 3 days, and this is a higher low. And what this old trader would do, he's long gone now. He passed away like in the 40s. That would be 1940. Got to say the 1900 now. But notice you got one there? A little bit of a rally. He would look for these things on what we refer to as the ticker tape. I just thought I'd bring it up because we're getting one right there. Maybe I could make those little circles a little bit bigger, but I'm kind of spotting that right there. And there is your low, 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 low. Today is a higher low. Could this start the ultimate run up to T2? We don't know. It could. Like a crossover, which we got like early on, like over here we talked about, which can be very interesting for confirmation. These can be other additional signs that we can look at. But just wait, we have volume coming up next, and I've got 2 different ways to look at volume where it can precede price action on the portion of the flag that I don't want you guys to miss. So it's interesting, but that'll be here in about 2 minutes. We'll start on that. But there you go. Right over here is where you might see, we'll see what we get, but who knows at this point. But anyways, just some indication, just some things to consider. Okay, the last one we want to look at here is CRM. Now, I might have done this one in a different class, but I still want to throw it out anyways. You can see the T2 target in there. We did exceed these highs. The additional 25 plus purchase did not occur. I have no idea. On paper money, I'm not sure what happened. It's during the holidays. Things might have been a little bit nuts, but we were saying, like right over here, purchase additional 25. It didn't happen. So I've still got a 25 limit, but you can see we did make a new high here, and we could be kind of marching higher. Now, one thing as we talk about volume here that's very, very interesting, you guys might find this incredibly interesting. This time of year, and I learned this years ago, but this time of year, you get a lot of brokerage firms that are not, I'm going to kill this right now, a lot of brokerage firms that are not actually in the office right now. And there are a lot of firms not in the office. Guess what you don't have? Think about it. The last 2 weeks of the year, they work, let's say they work hard during the year, maybe a stressful job, whatever the case is, trading on the floor or wherever it is. They're off. They're not trading. And look down here with me. I've got to maximize this because this is, you're just going to see this every year, and don't be surprised, but it can hold prices down. Is that better? Can you guys see it? You don't even need to put on your glasses to see this one. Look at that. Volume right there. It dipped. It's a lot lower. And prices are still just kind of steady as she goes, but volume is light. Folks, we just have a lot of, firms and traders that are just off the last 2 weeks of the year. And by the way, let's throw in there, market participants aren't trading the last couple of weeks of the year. It's just a low time. But what's funny is you get the Santa Claus rally. Maybe they think in the back of their minds they would rather be trading, but anyways, they're taking it off. And so don't let this kind of dissuade you or discourage you that, hey, it's just too weak, any sort of a rally, because this is a regular event year over year. Where it does change is maybe the first week after the first couple of days of the first year, actually getting past the Santa Claus rally, the first couple of days of January, you can see some moves. So park that in the back of your mind. Did get some questions on that, but it's just a regular thing. So you might not want to look at it as being, I don't know, just like a game changer this time of year, because it's like a normal occurrence. All right. Now, as I brought up volume, I'd be remiss to mention if I didn't talk about the importance of volume as we talk about this in terms of a volume-based bounce, okay? And what can happen on a flag pattern, let's say over here, you got a flag and you're coming down over here. What happens over here when volume begins to change? Because volume, it's like separate from price, but it's connected to it. And it can be an important factor that traders can consider for really important insights into preceding price action or into that bounce. Okay, and I want to start off talking, because I've got two different ways to look at it today, but we're going to look at it specifically as it ties in to swing trading here. How does it set up with that bounce and that bounce setup? So I want to go through some of those right now and highlight this for you. So let's talk about some newer trades today. By the way, welcome to all of you just joining us. Great to have you here. Let's see. So if volume is lower liquidity, what drives the Santa Claus? It's a fascinating point that Jay Rich brings up. It is interesting, and sometimes this is interesting, but if firms aren't there for a lot of trading back and forth, look at it this way. If there's a tendency for that to happen, and let's just throw it out here because I think it's a fascinating question. S&P 500, seasonality. I'm going to show it to you guys right now. Under the style, we can see what generally happens this time of year. Just scoot on down under chart mode till you hit seasonality right there. Boom, boom. And that is it. In fact, you're seeing it already unfold. But I'm going to make this more comparable. So let's hit our circle, our gear. And we'll go in and we'll just make these comparable in terms of price. Let's show percentage so we can bring the last 5 years up to the current level. And here we go. That's the Santa Claus rally right there. Do you see it? Right? The last 5 days of the year. Right there. That's the end of the year right here. There's the 24th. And there's your rally. This is over 5 years. Watch this. I'll do 10. You see the rally? This is 10 years on average this time. The red is the average of those years. Let's do it again. 20. You see it? It remains. Now you know why they say it. Now this is made up of a lot of different years. It doesn't have to happen every year, but you can see it. Sometimes it's retailers that run, sometimes it's tech. It can vary, but will we get a lift the last couple, I guess 3 days or so? 3 days? Yeah, maybe to the end, 3 market days to the end of the year. So first 2 days of January, that is. But I'd say that there might not be volume to drive it back down is what I'd have to say. Just generally speaking, maybe there's not enough, there's buying or selling or going on or whatever, and they're not holding it down. I'm just speculating, but it's a great question to think about. Yes, I will share the Jesse Livermore study with you guys. Hang on one second. Let me just make sure I've got this one. And I believe I've got the right one up here. Yes, I do. Here is the code we got built on this. I'm just going to put this into the chat. By the way, you'll find this. I'll put it down since I did mention it for you guys in here. I'll put it at the bottom. Here it is into the chat study. So Jesse, I'll just say Jesse L. Okay, there it is right there. And by the way, since I shared that, ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's going to the platform is accurate, well, the ThinkScript should unfold. But I want to say it's not guaranteed for timeliness or accuracy. There it is right there. It is a chart study. I also, and by the way, quick note, I will put it below the YouTube video. You want to click, for those of you viewing this, if you don't have it, you can see another one right here, right? It's a higher low, kind of a start. I did have this in my ThinkScript class if you guys want to check it out, but I will have it in the description section under more, under this video if you're viewing it as a recorded video. Okay, so let me just show you that real quick so you guys know where it's at. Oh, here's our swing trading class, but I'll back up one. There we go. I'll go down here and show you this. By the way, while we're here, encourage you guys to subscribe to Trader Talks. You can see we've got over 176,000 subscribers right now. Love to have you on board. A lot of great content from our coaches. There's one right there from Connie, a start here. Absolutely. You got some others that she teaches. There's one right next to mine here. Advanced option strategies. Check that out as well. I'll throw this one in here. If you guys want to get the full info on that Jesse Livermore, there we go. There we go. Classic trend strategy from a pioneer. Here's all of them if you guys want to take a look at it, but take a look at it. If you want to learn more, and I've got the scan in there too, if that's of interest to you. Here we go. Oops, got to paste it in the right spot. 1 second, guys. There we go. That is the thing for it. Okay, I'm getting better about posting these live in our discussion so you guys have it. Sri, I didn't actually go through and backtest it, but I know that that's something that Jesse Livermore had done. He'd written about it, talked about it, and just one that he'd utilized. You can kind of see it over here. This is the S&P 500, but yeah, nothing's 100% in the market, but I thought it was an interesting one. It just happened to show up on that AKAM. Okay, I got to move forward here with some of our discussion. Good. Okay, let's get into, there we go. We'll get in now into that discussion. I love you guys' questions. Throw those in the chat. I'll try to address those later as well. You can also ask those questions at the as a YouTube comment at the end, but I love the comments coming through. They're great. Okay, first one up happens to be also a dividend aristocrat, meaning that these companies have increased their dividends 25 years consecutively each and every year, and that's going through some recessions. They've raised the dividends. This is one A.O. Smith, one of those steady as she goes type companies. Of course, that's historically been the case. Anything can change in the future, just like we discussed with dividends. They're not guaranteed going forward, but here you go. Let's look at AOS right now. AOS kind of coming off the bottom, a little bit of a bounce. Now, I wanted to talk first of all about actual volume on the pullback and some things to be mindful of when actual volume pops up. This is the consolidation right here. We don't know when that will occur, but I can tell you this right now. If you get these days over here, or these days over here, that noticeably, and this is a quiet time of the year. Let me expand this out. When you see a volume spike coming in on the flag, it can get things started. Now, I don't see anything getting started right now. Again, could be slow for some stocks at this time of the year. Maybe it begins to spike after, maybe not. We'll have to wait and see. But you can see a noticeable change in that volume, like double the last couple of days previously, right? Double today. It was also a close above the high, the low day right there. That is a volume spike that you want to keep an eye on for potential prices moving up. Now, as we look at this, I do want to put an example trade on here as well. We haven't really begun to bounce yet, if it does in fact bounce. And I would say this is really quite early in the trend. This is like a similar low right here. We've been down. It's different from the other stocks that I'm going to show you next. I would say this, it's a higher low, higher low, higher low, and we did break some highs and we hit another high, and we got a higher low here. I would just say it's maybe not the strongest trend, like something like this. It's already going up. Does that make sense, you guys? You can see that there might be a trend developing here. We're getting volume signs that can occur right here. And this is quite interesting. Now, a quick note before I dive into more detail on the trade itself is that if there is perceived more demand, it can be like anything else out there in the marketplace that we might purchase. If demand goes up, supply stays the same, what happens to price? Price can be more sensitive to the upside. It can, in fact, lead price action. We're doing that. We're looking at that within possible change or a reestablishment of that longer term trend coming back up again, and a bit of a price pattern too. Do you see it right there? Now, there was an early one right over here. You actually got that Jesse Livermore right there, that little bounce up and then consolidation. But will it begin to break or not? You did get the close above the high, the low day. If somebody was looking to put a trade on something like this, they could do, here's the flag. And I like to look at the initial move right here. Let's just quickly put one. Here's your move right there. So your target could be off of this low right here, is a way to look at it. Okay, to the upside. I'm just going to kind of eyeball it. Notice how close, though. I think it's actually a little bit higher. That target comes right to that upper range. This happens so much, it makes me wonder if there are fundamental values that maybe institutions are saying, you know what, we think it might be valued at 74. That's a question. I don't know. But why does that happen a lot? It just happens quite a bit. So it might be a play back to what some perceive as fundamental value. And if that were the case, the stock could be undervalued at this point. Okay, I kind of sliced in there a little bit of, slipped in a little bit of a fundamental concept, but it is fascinating how that occurs. Well, let's put this on right now. Maybe let's do another thing. We can maybe add to this trade if it goes higher. I'm just going to start this off with maybe 50 shares. Maybe we can add to it if it begins to break out with a stop down below here. Let's just put it below our range. This was kind of the low of that range. Right over here, about 70, we'll put it about 67 and 74. So I'm going to go up top, my trade tab. I'm going to go to my ask price. I'm going to right click, buy custom OCO bracket. I just mentioned 74 on the top. This is the upper target range. These are just approximations. Good tail cancel, good tail cancel. On the downside, I think it was just below. It's very tight. 67. It's close. Look at that. It's at 67.84. Look at that range relative to the potential exit levels that we talked about, right? 74 to the upside, 67 to the down. We'll go ahead and just start this off with a 50 share position. Boom, boom, boom. Confirm and send. And let's set this guy up right now. There we go. All right, let's take a look at it. I'm just going to show you guys something here on the chart. So we've got our levels set up. Look at this. Now, this is like we talked about in our disclosures about the stop, right? It's a potential exit level right at that level. It does go to compete with other levels out there, but I want you to just look at what some traders would call the risk to reward ratio. This is why flag patterns can be interesting. Very, very tight flag too, but a pretty good lift up over here. Hopefully I didn't misplace this. You know, you just measure this move off, let's say the bottom of that run, where maybe it's not quite 74, but I think it's close. All right. I'm just actually going to pull it down a little bit in a second, but look at this. Potential risk then, if we were to get out very, very near those stops, would be about right there, right? We're just estimating what that risk would be. Potential reward, if it does run to the full T2 target, that. Now, that is what some traders really like. If they put this trade on, they think that volume down here might get us going higher. There you go. It could get us started. So there you have it. Okay, risk reward ratio. Next stock, LMT. Okay, I'm going to take this guy off right now. And I'm going to show you a couple of things in here. Remember what I talked about previously. Price reaction to volume itself, even within the pullback. But we're looking for prices to be strong to the upside. Okay, this could resume a longer term upward trend. Now, Connie, CMT is going to say, Mike, maybe you're forgetting something. Maybe there is a inverted head and shoulders pattern there because she's going to pick up on it first. Shoulder, head, shoulder. We talk about these patterns as well, right? And those price targets too. But on the right side of that shoulder over here, you know what we're getting? The same thing we'd see with the cup and handle pattern too. We're getting a flag pattern also showing up. Do you guys see it? Right there. We're getting indications maybe of a bottom with the head and shoulder, inverted head and shoulders pattern, but right there is also a flag that we can explore, and let's do it. Here's the pullback, pullback, pullback. Whoa. Wow. What's this? That's a massive volume spike, and that's a big one. And that's on a pullback. What happens after that spike? Now, this doesn't happen every time, but for traders that are watching volume, it's one of those things they really try to keep an eye on. Some traders will really try to keep an eye on this. What happened to prices right after that, you guys? Right after that. At that point, prices go up. I want you to kind of see it and think through it. Prices went up. Now, again, it is the end of the year. As you can see, it is the end of the year. Volume's low. Prices spiked up. I mean, it wasn't even a hold, but volume kind of preceded price action in that extent. Over here again, look at this, another one. Price is really coming down here. What was this day? Do we see demand? Gosh, I'm going to zoom back in. Okay, it's actually, I lined it up, but it's not a straight arrow. Okay, again, price is kind of following through a little bit today. We're pulling back a little bit, but there might be some demand building up behind here. Now that's volume as a spike itself. Actual volume. We do use a secondary indicator. There are a couple of different things we can use. Now, it's been known the original one is referred to as OBV. It's roughly the same formula as money flow. It's almost virtually, the formula is slightly different. Folks, you can use either one because it's virtually the same outcome-wise. Money flow, unbalanced volume. You can use either one of these two. But notice also, too, what this will do as a preceding type indicator, even ahead of a crossover, because volume can precede price action. Not every time, but remember, that's that demand working behind the scenes. Can it help to force prices up if you're getting enough buyers relative to sellers out there? And what the money flow does is it just says, well, let's take a look at the volume. And here's the volume right over here. And on the up days, very important point, if we are up on the day, if we're trading up, if we close higher than the prior day, we take this volume right here and we simply add it down here to the money flow, it goes higher. And what we start to see over time is a picture unfolding, and it tells us a couple of things. Is the stock being, according to money flow or on balance volume, is the stock being accumulated or is it being distributed? Are we seeing maybe potentially big funds out there making purchases? Because to be honest with you, to move the money flow or OPV line, it takes a lot of buying over time. And if you track that line, I'm going to lose the RSI here for just a second because I want to highlight this. But these are the two that work together. One is a collective, one is individual. The one on top, volume individual. This is a collective of volume. Look down here. You see this high over here? Folks, we busted through that right there. On this rally right here, according to the way traders will use money flow, this high that you've got up top should be exceeded because we have purchased more shares through here. We broke above these highs than we have over here. You know what helps to account for that? The individual bars. These volume bars that we were just looking at, that was a massive spike. Did we close up on the day? We did. And this is all happening down here, not up here. So a bare minimum, according to the way traders will use this, is that we should at least exceed this high right there. Because we don't get that every single time. This is a rare event. You have to have a number of these volume spikes, but it's such a cool way to see it unfolding as it's potentially setting up there for us, right? Okay. You guys with me so far? Appreciate Connie. Yep, she's done great. Okay, let's see, Mike. Is money flow a momentum indicator like RSI, MACD? It's simply, it ties in. Okay, the momentum component of it is just related to prices closing up on the day or lower. So it's different. It's more of momentum of real buying relative to selling. And you, by the way, you can get early warning signs too. Like say, for example, I'm going to highlight this. If you saw this over here occurring, let's say we made a new high right there, right? We made a new high right there. But if money flow, which is down here, we blasted above it. So there was a lot of buyers coming in here on this Lockheed. But if money flow did something like this and it was way down here, even though prices were making a new high, that's what's referred to as an early warning system for weakness to the downside. Now, it did pull back, you know, and it kind of pulled back with money flow, but man, something hit right here and we reversed into a fascinating inverted head and shoulders pattern, which, by the way, its target, very important to note, is the high range to the low range right here in price, right there. And then what we simply do, I'll change colors here, but we just take a measured move of this exact same distance when we break out. And guess what we just did? On that bar that did have that volume, it's low, because so maybe we have to put our glasses on this one, okay? Because at the end of the year, the volume is light, but it did spike as we broke above highs. And so we say, well, could that be our target? Well, this is the target of the inverted head and shoulders pattern. This range to this range on the breakout. So will it happen? Money flow says what? It will happen because we took out the high already. We did take it out. And yet price is lower. Okay. I've got to blast through these. I don't know if I have time to put I'll go back and put some trades on these right now, you guys, just on targets we've got. But, you know, just take a look at these. I've got a couple to look at here. Now, we did look at Intel as well previously. Intel kind of getting going. I mentioned this in a class I covered. I think it was for Barb yesterday, but right there they announced NVIDIA had purchased $5 billion worth of Intel. Not a small amount. Not 5 billion shares, but $5 billion. You can see how this might start to get this guy lifted up higher. Perhaps it could go higher here. We don't know. We'll have to wait and see. I'm just noticing over here, volume, a little interesting. It's just kind of doing one of these things. By the way, the volume on the green bar right there, this big volume, sorry. It was actually that green bar right there. So it's the end of the year. We'll have to wait and see what we get on Intel. Some of the semiconductors are showing maybe bullish signs if traders are looking at bull flags to pick up on it. MCHP, do you see the potential flag pattern here unfolding? Money flow, oh, this is subtle, but we did take out this range. Right now it's just in line with price. What could we be waiting for here? Well, what about crossover, our crossover discussion? Maybe giving a little bit of time, maybe the close above the high of the low day, right here, another close above the high of the low day to get us moving. Like I said, the semiconductors a little bit weaker with volume right now at the end of the year, but they're still actually holding up within the flags. Some of these are. We've got one more to show you here on semiconductors, and I'll move on. Move on. Yeah, there's on as well. This is a little different. Big spike right there. We began to go up. What this can do, too, if you have more buyers than sellers, company has a float of shares out there in the market, a public float of shares. Just like if there's demand for a certain quantity, but let's just say that that quantity starts to decrease. Well, could prices be more sensitive going forward with that? Is that possible? Prices could be more sensitive. And so that's all happening as we're breaking above this range right now. Now, we're not above these levels, but it is trending with price. And you want to have the the bare minimum of that is that you'd want to have, the money flow trending higher with prices as well. Sometimes it can be even, stronger, like we just saw with LMT. We'll see how that unfolds, but there you go. Here's another fascinating flag pattern kind of holding sideways in here too. Okay, one more. I'll show you guys this, and then we'll move on. Actually, these are very similar. I got a couple of cup and handles. We like to look at those too as well. This is mRNA that shot higher over here. Okay, there's a little bit of your pullback, and there you go. Maybe some support right through there. Massive move relative to where it was over here. Look at money flow. Okay, really starting to accumulate a little bit. And last one, a bonus one. How about that? A bonus cup and handle. You see this cup and handle? Lulu's been down for a while. There's your handle right there. Over the Jesse Livermore. I think you had to close above the high and low day as well. But this one too, showing some strength. And both of these cup and handles exceeded the prior high. And so too did the money flow. And by the way, last but not least, here we go. We broke it. What was this high range? This high range right there. 250 right there. We're below it. What does money flow or OBV say? With those volume spikes adding up, we could exceed that level. Folks, I hope you found this informative and useful. I wanted to go back a little bit earlier into the potential, what could be happening behind the move. What gets us to that crossover, which is still, like for a lot of traders, a confirmation point. We talked about that previously, right? We talked about other indications that could hold. But if you're, we wanted to tap into that, folks. If you're getting value from these discussions, do me a favor, smash that like button. It lets me know that this is useful for you. You guys are getting this. We can have more conversation about it. But I wanted to end the year also saying, hey, yeah, let's be mindful of what volume can do. Can it be a volume-based bounce as well? Can maybe we get a little preceding strength ahead of those signals? All right, everybody. Well, on that note, you guys have a fantastic rest of the day. Thank you so much, Connie, for your help in the chat. And I have to say, yeah, this is my last class until next year. And so everybody have a fantastic new year. I look forward to future discussions and next year of many discussions. So on that note, take care. I'll see you next time.